Hi, I'm Glenn Stebbings, President and CEO of Logistic Insurance Solutions. We provide insurance markets and risk management consulting services dedicated to the freight broker industry. Today, I want to talk a little bit about the trends of litigation directed at freight brokers and shippers when motor carriers that have been contracted by freight brokers or shippers have accidents and third-party injuries arise and or fatalities. There is a series of things to be conscious about that can reduce your exposures that we're going to try to review in this presentation. So, as I mentioned, there is a volume of litigation really being directed at freight brokers and shippers, and it'd be important to understand what's the background to that. The reality in the marketplace is motor carriers that freight brokers or shippers are contracting, majority of them have only $1 million of auto liability coverage. That's the vast majority of motor carriers that are on the road. But if we were to look at accidents when they arise and what plaintiffs' attorneys have been able to achieve in judgments, that number is closer to $3 million. As a result of that, we are seeing other parties not responsible for the operation of the truck or their maintenance or the hiring of truckers being drawn into that litigation. Who are those parties? Those are freight brokers who are acting in the capacity of arranging transit for shippers, vetting motor carriers, and then moving freight. Sort of like a travel agent and what they do in terms of moving people around the country. Shippers, of course, are parties that have cargo inside the truck that's being moved. There has been no tort reform laws limiting judgments against motor carriers. Literally, judgments can be in the millions. Actually, we've had $1 billion judgment just last spring, $1.2 billion against the freight, against a motor carrier. Okay, so what's driving the current litigation? The reality is freight brokers and shippers are being drawn into it because motor carriers don't have enough coverage in place. The average motor carrier policy for auto liability that would be responding to bodily injury or fatality claims is only $1 million. If we were to look at the actuarial statistics of data and what the average judgments are, it's closer to $3 million per fatality. So you see a major shortfall in terms of coverage. That motivates plaintiffs to try and draw in all parties. If we look at also the amount of judgments that can be leveled against a motor carrier, it's significant. There are no tort reform laws that have been passed that limit judgments against motor carriers, and tort reform laws specifically will cap how much can be paid out. No such limits are present. So there is a view that a lot can be gained in litigation by a plaintiff. So what we're also seeing is there's an increased cost of defense for motor carriers and freight brokers in the marketplace because there's this big perception that there are major judgments that can be achieved by plaintiffs in behalf of injured parties. Increasingly, the cost of auto coverage for motor carriers is continuing to rise because of the active litigation environment. And that's tended to result in them limiting the amount of coverage that they're putting in place. As I mentioned, 1 million is the average. Many mid-size or larger operations could have higher limits, but the cost of which is resulting in many of them reducing those. So there is a view by plaintiffs to drag in all possible parties. There's no downside in the U.S. legal system for a plaintiff to name anybody and everybody. So that's what's happening, and that's why we're seeing an increased amount of litigation taking place. There's also been litigation proposed for freight brokers and shippers, the National Safety Standard Act. That is designed to green light, red light on whether or not a motor carrier is deemed safe to operate on U.S. highways. That is the principal role of the FMCSA. We are seeking to pass legislation that clarifies whether or not a motor carrier is safe to be operating. Principal issues to look at there are the actions that a freight broker can take currently to judge whether or not they are safe is pretty limited. It's three things they can do. They can evaluate through the FMCSA site SAFER whether or not valid authority is in place. So a motor carrier can have either common carrier or contract carrier authority. You can view that at the FMCS site SAFER. The other thing that you can see on that site is whether or not auto liability coverage has been registered in that site. And that's another action that a freight broker or a shipper could take. Then finally, there's this issue around safety ratings. Current format right now, principally, you're going to see a motor carrier is either deemed satisfactory, that's an FMCSA designation, or conditional. That means there's some circumstances that cause concern, and they are to be worked out, or unsatisfactory, meaning specific concerns and they've lost their authority as a result of that. However, there's also a non-rated category, effectively, because the FMCSA has not inspected and been in a position to deem whether or not a motor carrier is satisfactory or unsatisfactory or conditional. The resources are not there. So almost 90% of the motor carriers on the road have no rating at all. So there's limited things a shipper or freight broker can do to vet a motor carrier. Legislation that is the Transportation Intermediaries Association is attempting to pass the National Safety Standard. So this can be clarified. So let's take a look now about what are the main allegations that are coming up in litigation against freight brokers. And they really fall principally into two allegations. One is the allegation of negligent hire, meaning very basically the view is that the freight broker did not do enough to vet and ensure the motor carrier was safe to operate on the roads. Let's keep in mind, there's a limited number of actions that they can take to actually do that. They can go to the FMCSA site and verify if valid authority is in place, valid insurance is in place, and that their safety rating is not unsatisfactory or conditional, or is satisfactory. But of course, we have the other fact that most of the motor carriers on the road, 90%, have no rating at all. So there's a limited number of actions that can be taken. However, if you are doing a diligent job at ensuring that you consistently make sure that the common carrier authority is in place, valid insurance is in place, these are principal actions that you can take. What's the other major allegation that is filed against freight brokers? That falls under what's known as vicarious liability. Very basically, that means the freight broker did too much or they misrepresented themselves to the public as a motor carrier and not as a freight broker. At the end of the day, it's important for a freight broker in their websites, their advertisements, to clearly reflect the services that they provide. And we're going to explore in this webinar further how freight brokers can sell value adds to shippers, and that can be a significant issue that supports them. So there's no need to suggest you're a motor carrier at the end of the day if you're doing a good job at selling the value-added services that freight brokers provide. And we're going to explore that issue. You also want to make sure that your website and advertising materials is clear about your freight broker services. Another important issue where freight brokers can get into trouble and be exposed to vicarious liability is signing shipper contracts that actually suggest the freight broker has the legal liability of a motor carrier, or at the end of the day, can take certain actions only a motor carrier can take, such as hiring and firing of drivers, maintenance of equipment. These are all things that are impossible for a freight broker to perform and should not be in contracts at the end of the day. We'll explore furthermore the argument to present to shippers why these should not be present. So the misguided shipper-broker contracts, again, create major exposures for them because they're specifically suggesting a freight broker can perform services that they can't, or they assume the liability of a motor carrier. When litigation is filed, there's a process of discovery, and all documents associated to the shipment and the parties that are involved will come out, and these contracts will be viewed, and they can be very damaging at the end of the day to the defense of a litigation allegation of vicarious liability. The problem with shipper-broker contracts is the parties that are drafting these, legal counsel for shippers, principally are just simply trying to put every liability conceivable that a shipper could have onto a freight broker. And that's really misguided because there are significant actions and issues and exposures they actually create for themselves when they take that action. At the end of this webinar, we're going to explore the ramifications of these misguided shipper-broker contracts. So we don't want these contracts expanding the liability of a freight broker, and it is the detriment of any shippers for that to take place. Freight brokers commonly right now have forms of auto liability coverage, known as freight broker auto liability, sometimes referred to as contingent auto liability. These coverages are specifically designed for freight brokers. Freight brokers do enjoy limited liability under the law versus a motor carrier who has unlimited liability. Freight broker authority is subject to a federal definition, and as a result of that, litigation principally has to be filed in federal courts versus state appellate courts. That is a significant risk reduction exposure because state appellate courts can often be friendly to plaintiffs. You have states where judges are voted into office, and to maybe no surprise, plaintiffs are many times supporting the judges in their election campaigns. So there's a fraternity there that's concerning at the end of the day, and it's not the best venue to be dealing with litigation. Defense for freight broker authority, because it is a federal authority, can file motions to dismiss a case in state appellate court under federal preemption. That literally can stop the litigation and require that it be reissued in a federal court, which is a much safer venue for a freight broker to defend themselves. Misguided shipper-broker contracts. These are principally being drafted by legal counsel that don't understand the benefits of freight brokers and value adds they deliver as a result of insurance coverages that they purchase that can be extended to protect the shippers. Freight brokers can purchase a form of auto liability coverage that can be extended under additional insured status to protect the shipper. These policies offer another layer of coverage. The principal coverage to defend a shipper or a freight broker is the motor carrier's auto policy. But as we saw earlier in the presentation, majority of truckers only have $1 million worth of coverage, while we're seeing judgments as high as $3 million against parties that are deemed responsible for the claim. So now another level of significant financial protection is present for freight brokers. Freight brokers commonly have limits as much as $3 to $10 million in place because freight broker auto coverage has been more affordable than motor carrier coverage. So they've been able to invest in these forms of coverage that protect their operation and can be extended to protect major shippers at the end of the day. So if you have coverage under a freight broker's policy, why would you want to expand their liability in the contract? That makes no sense. Freight brokers enjoy limited liability because they are a federal definition. As a result of them being a federal definition, there are motions that can be presented and claimed when they are filed in state appellate courts. Motions such as federal preemption allows the state litigation to be dismissed. And that many times can end the litigation. It could be filed again in a federal court, but that's a much safer venue for a freight broker to defend themselves within. So at the end of the day, really, shippers and legal counsel who are drafting these contracts are actually creating more exposure for them because they're creating a scenario where a freight broker can be deemed liable like a motor carrier. It's misguided to suggest a freight broker assumes the liability of a motor carrier or can take actions only a motor carrier can take at the end of the day, such as maintenance of equipment and the hiring and firing standards of drivers. You want to enjoy the limited liability that a freight broker has. If you're an additional insured under their policy, you don't want to expand their liability, obviously. Legal counsel fail to understand that these coverages are in place. And as a result, actions such as suggesting a freight broker is a motor carrier in a shipper contract could actually invalidate that coverage. And freight brokers can have as much as 3 to 10. We've seen some large freight brokerage operations have as much as $50 million in limits. Why would you want to expand the liability under a policy that you're protected? So these contracts have to be carefully evaluated and should never suggest a freight broker assumes the liability of a motor carrier or can take actions only a motor carrier can take. Freight brokers can also offer forms of cargo coverage that provide additional protection for shippers. Motor carriers will have motor truck cargo coverages in place, and these coverages, in most cases, should be responded to a claim, but there are certain exposures that are not covered at the end of the day under motor truck cargo policies, such as acts of God. That's not covered under that policy. If there was a storm or if there was a tornado and your cargo was damaged or destroyed as a result of that, a motor truck cargo policy is not going to cover that exposure. Freight brokers can offer forms of broad form contingent cargo coverage where acts of God are actually covered. It's a much broader form of coverage. Freight brokers can have that in place. There's trip risk coverages that freight brokers can procure on a shipment-by-shipment basis that provides full all-risk coverage in place for that shipment, the broadest form of cargo coverage that's available. And that also further mitigates exposures for shippers. So what do you have to do as a freight broker? You got to educate your shippers. You have to be proactive in that regard. And you need to sell the freight broker value adds at the end of the day in the form of the insurance coverages that are procured, plus additional actions that you take in the vetting of motor carriers. We remember the principal allegations that are filed in litigation where bodily injury and fatality arise against a freight broker is the allegation of negligent hire. That same allegation would be filed against the shipper if they're the party directly contracting the motor carrier. Now, purely as a result of using a freight broker, a shipper immediately moves themselves away from that exposure. They've contracted a professional organization that has valid FMCSA authority, freight broker authority, and their job is to vet the motor carrier, ensure that they have valid authority in place, valid insurance in place, and the current safety ratings are not unsatisfactory or conditional in the FMCSA safer site. Those are actions a freight broker will take. Shipper who is not directly contracted, the motor carrier is immediately removed from that exposure just because they're not the party contracting the motor carrier at the end of the day. So there's a major defense present as a result of that. What else can you do to educate your shipper? We mentioned earlier the value-added coverage that are provided. You really want to see that your marketing and sales team become conscious of the scope of insurance coverage that's been purchased that can be extended to the shipper. Freight brokers' auto policies with higher limits than motor carriers have should be part of the sales process at the end of the day of the shipper because increasingly shippers are being named in litigation. If there's a secondary policy providing coverage for them, that's a huge value add at the end of the day, protect a shipper from incurring, hundreds of thousands of costs just associated with the defense. That needs to be solved. What needs also to be solved is the level of professionalism in the vetting of motor carriers. Investments in technology that are checking in real time that the motor carrier has valid authority in place is operational now. It also checks to see that their safety rating is not conditional or unsatisfactory. There's actions that some of the technology provides that will also support that valid insurance is in place. So freight brokers that invest in this state-of-the-art technology or also bring to the table defense against allegations of negligent hire. And that, again, is important at the end of the day when shippers and freight brokers are facing that allegation. So how do we increase awareness of exposures that shippers face out there? For all intents and purposes, unless they've been involved in an accident and drawn into litigation, is there awareness out there? This is where a freight broker needs to actually be proactive and point out facts in the marketplace. So again, we want to be proactive and raise shippers' awareness of exposures. And there are statistics that should be reviewed with shippers to give them pause to consider the exposures that they face. Unless they've been drawn into litigation, they may not have this awareness. But annually, there's more than 4,000 fatalities taking place in the U.S. highways as a direct result of an accident involving a large motor carrier. That's 11 a day is taking place. There's 160,000 injuries where bodily injury is taking place involving a large motor carrier. That's 438 a day. So it's happening out there, this frequency, and it's not necessarily a question of will you be involved in a shipment where an accident takes place, but when at the end of the day. So being prepared for that is a huge issue. We've seen one instance where a shipper who directly contracted a motor carrier was deemed negligent in the hiring of that motor carrier, and they faced a $30 million judgment. That situation would not have arisen if they had used a freight broker to move that shipment because they were not the party vetting the motor carrier. So an allegation of negligent hire couldn't really be filed against them. It would have to be filed against the freight broker. They are removed from that allegation through the use of a freight broker. So our $30 million judgment against a shipper was present there, and only $1 million of coverage was provided by the motor carrier. They faced a huge economic hit as a result of that, which would have been eliminated if a freight broker was used in that situation. We're also seeing some really concerning judgments in the marketplace. It was actually a $1 billion judgment just filed a year ago against the motor carrier as a result of fatality. You might think there must have been a dozen people killed. There was one individual, a promising young man, but this went to trial, and a jury deemed a $1 billion judgment was appropriate. That's how significant financial exposures are against motor carriers because of no tort reform laws. And these issues also drive plaintiffs to pursue aggressively all other parties when litigation arises beyond the motor carrier, the party that has cargo in the truck, or the party that contracted the motor carrier in the case of a freight brokerage operation. So again, when shippers contract a motor carrier directly, they're exposed for the allegation of negligent hire. And they can be exposed for the allegation of vicarious liability. That's when they exercise too much control of the motor carrier. Actions like calling the driver consistently or setting up a penalty schedule if they're late for delivery, these can all drive successful prosecution of vicarious liability against a shipper. So when shippers don't use freight brokerage operation, they've got other expenses. They have to have an in-house logistic operation. Employees have to be hired, health care. These are all expenses that are eliminated or greatly reduced if a freight brokerage operation is used. So what needs to be developed, freight brokers are dealing with shippers, is an argument to be made if a shipper presents a contract that they're asking them to sign that misrepresents freight broker's liability or misrepresents actions that a freight broker can take. The argument is the bullets that we're going to review right here. Freight brokerage operations provide a higher standard of vetting motor carriers than commonly most shippers will do. Technology can be invested that does a better job of vetting the motor carrier, ensuring that they do not have conditional or unsatisfactory safety ratings. This technology can also do a better job of vetting that valid authority is in place for a motor carrier, an important issue at the end of the day. And as mentioned, also support that valid insurance is in place and that their safety ratings of the motor carrier are not conditional or unsatisfactory. Second point, shippers being one step removed from engaging in the motor carrier automatically reduces their exposure for an allegation of negligent hire. Professional freight brokerage operation that's vetting the motor carrier is a first line of defense for a shipper at the end of the day. Freight broker operations can significantly reduce the cost of shippers associated with logistics, since they'll perform a majority of the services associated with moving the freight. Freight brokerage operations commonly have freight broker auto or contingent auto in place with higher limits than motor carriers. Commonly, 3 to 10 million is in place with freight brokers, and this is a result of freight broker auto liability being more competitively priced than motor carrier liability, and that's a result of them having less liability than a motor carrier. That coverage can be extended to shippers. That's a huge value add at the end of the day. You're named in litigation as a shipper. It's a minimum of 6 figures to defend yourself or try to extricate yourself from a lawsuit. And that can be a huge issue at the end of the day. And if we consider the statistics of how many fatalities are taking place, more than 4,000 a year, more than 160,000 injuries, this is something that needs to be considered and really should be in place for a freight brokerage operation that a shipper can take advantage of. Shippers can take advantage of freight broker auto liability coverage by obtaining additional insured status under these policies. If they have this in place, that policy is designed and will assign legal counsel to represent them in defense up to that freight broker's auto liability policy limit. Freight broker authority is limited liability versus motor carrier liability. They're subject to a federal definition. They can be extricated from state litigation under motions of federal preemption. So they have limited liability. That means there's more coverage in place at the end of the day to protect the shipper under freight broker authority versus the motor carrier might face. So if a shipper's enjoying freight broker auto liability coverage, there's no reason why they would want to expand the liability of effectively a joint insured and a shipper-broker contract. So shippers, again, can be educated if they understand they're shooting themselves in the foot by expanding the liability of the contract. There's no logical reason to do that. Shipper contracts can also actually be in a position to cancel coverage that might be in place. If a contract says a freight broker assumes the liability of a motor carrier, that freight broker auto liability policy can actually be voided because specifically freight broker auto liability coverage, or contingent auto, covers freight broker authority. So you can't in a contract expand your liability to that of a motor carrier and anticipate that the insurance company is going to stand behind and protect that. They will not. There's typically contractual exclusions in freight broker auto liability coverage that will not respond to contractual liabilities that are assumed in a shipper-broker contract. So again, no reason for a shipper to do that if they can be enjoying motor carrier or freight broker auto liability coverage of limits 3 to 10 to 20 million, which is commonly in place. So shippers want to be very conscious. Contracts that misrepresent freight brokers' liability to that of a motor carrier, or that suggests a freight broker can take actions like the maintenance of a third-party motor carrier's fleet or the hiring fire standards. Those issues present in a contract can actually void coverage that's in place through a freight broker auto policy that's extended to protect the shipper. That's the last thing a legal counsel who's aware that this coverage is in place would want to happen. I've actually spoken at conferences on this subject, and I presented issues that has been present in this webinar. I had several shipper attorneys come up to me and essentially say they acknowledge they've been doing an injustice to their shippers. They did not understand freight brokers that can procure coverages that are extended to protect their shippers. And they did not understand poorly worded contracts can actually then invalidate that coverage. And they did not understand that freight brokers have auto limits that are higher than most motor carriers, another significant financial protection. So at the end of the day, a contract that voids that coverage is a disservice to shippers. If properly presented, these arguments to legal counsel, you can overcome their desires to misrepresent a freight broker in a contract as that of a motor carrier. Once again, auto coverage freight brokers can provide and extend to shippers are significantly higher in terms of scope of limits and coverage versus most motor carriers. Freight brokers need to sell to shippers the fact that this coverage is in place and can be extended to protect their major shippers. So if a freight broker signs a contract with a shipper that has expanded their liability, at the end of the day, under indemnity provisions, yes, they will be financially responsible if they don't live up to the indemnity provisions. But we have to be conscious that freight brokerage operations come in many sizes and don't have the financial resources to stand behind the obligation of these contracts. Far better that the exposures that shippers are most concerned about, i.e. defense against litigation, be provided by an insurance company with billions of assets. So any actions that invalidate that coverage makes no sense. It's just a failure of legal counsel drafting these contracts to understand the result of these poorly worded contracts that suggest freight brokers assume the liability of a motor carrier or can take actions that only a motor carrier can take in maintenance of equipment or hiring of their employees. So a shipper-broker contract that suggests a freight brokerage operation will ensure that the maintenance of a motor carrier's fleet is sound and in place, or that the hiring standards of drivers is sound, actually creates vicarious liability for the shipper. Because at the end of the day, they cannot take those actions. It's impossible. Yet, if there was litigation that arose and the facts uncover that there was poor maintenance of the equipment that a motor carrier had in place, creates vicarious liability. And what we mean by that is they've suggested a contract, the freight broker is going to ensure that the maintenance of the equipment is sound, yet they didn't then take any actions to ensure that the freight broker was actually taking these actions. That creates vicarious liability to the shipper. A plaintiff would argue, well, you have it in your contract that the freight broker is going to ensure the equipment's maintained, but you didn't take actions to ensure that that was operating. That creates exposures for the shipper at the end of the day. So it's important shipper-broker contracts properly clarify a freight broker as a freight broker, a party that principally vets motor carriers, checks that the valid authority is in place of a motor carrier, checks that valid insurance coverage is in place, and currently ensures that FMCSA safety ratings are not conditional or unsatisfactory. Freight brokers should avoid using any conditional carriers, is our argument at the end of the day, because if there is an accident, there is a fatality, it'll be a significant issue in that litigation against ultimately the shipper and the freight broker.